All right, good afternoon once again, everyone. We are looking at the gold membership. I do need to enter the webinar. If you have any specific questions to me, it would be good for you to not to send it to me personally because it will open up and everybody will see it, but just send it to the organizers. All right? If you send it to the organizers, I will be able to see that very clearly. And I'm going to pop the questions out here. All right, so let's take a look at this. A couple of things that we really need to focus on, and a couple of questions that people have going to give us directional momentum for what it is that we're talking about today. Let me walk through it once more. Okay, wait a second. Did Berkshire trigger? Hang on. I have this running in a different account. No, it did not. All right, close, but no cigar. Okay, so when we set up these long calls, there are... Sorry, I'm hearing all kinds of feedback. Okay, when we set these trades up, they are supposed to go in after the close of one day before the open of the other. Now, I try to get these up by 7 a.m. and I have a video. I've decided that it's just as easy to have a video there, pop it up. It takes me 4 minutes to do it, and it's just easy. It gives everybody a chance to understand what it is that's going on. So they are to be set up pre-market. A lot of folks were saying, hey, listen, when do I set this up? Is it supposed to go in? You can very easily set this trade up during the course of the day. There's nothing wrong with that. All right? What the open does for the gold membership is give folks the best opportunity to get in if the stock is getting ready to run. All right? Two caveats to that. If you have a long trade and it is gapping up, the charts are gapping up, you do not allow this to execute at open. And here's why. Let's see about the execution event here. Where are my pictures? Time conditions, high or low. Don't have that sitting there. Here's what I mean. Let's just go ahead and take a look at it. Here's the big thing. Here's the big thing that happened to us today. Incidentally, this stock moved so well anyway that it moved regardless. It did close out today, unfortunately, but let's take a look at it. I'm saying unfortunately because I think it's got room to run. All right, so let's take a look at the 30-minute chart for Triple D. All right, let's say we had set this up in the morning pre-market with just the regular conditions that we normally have set up in the gold. When you came in, and this is on Central Time, when you came in, the stock was all the way up here. And the option event was, in fact, which is where it triggered in one of these other accounts. Let me open it up. The option would have triggered at the price mark of $2.79. All right? Now down here, where it pulled back, and it normally does pull back. When something gaps up, it tries to fill the gap, and this is exactly what this thing did. It came into the close of the prior day and held. Now that close happens to be pretty close to the trigger that Triple D has, breach of 63.94. And that is this one right here. right? 63.94. Notice the gap up sent us well above that region. And so our goal, if we see the gap coming, right, we can wait for it. If we have the ability to stare our systems down, we can wait for it to come back into the breakout area that the gold membership team suggests the buy at. If the buy had been taken there, the price was closer to 210. Hang on, let me look at this again. Just had this up just a moment ago. The price at the initial open, the event where the breach was supposed to occur, is somewhere around 199. 199 to 216. Okay? That's a big difference to 271. That's very, very important for you to realize. So if you're not able to do it, however, let's say, you have a job, you got things to do, whatever, here's what you look at. You set up the time condition associated with the particular open. All right? It's still at or above 63.94, but it's not even going to look at this order until 9:45. All right? So if it waits until 9:45, you're not going to get smashed by the gap up. Everything else remains the same. Okay? So that's the key event for you to look at right there. Using that conditional submit the order at a specific moment. It's going to wait until that time, and then it's going to go to the market condition, and it's going to wait on that time. All right? Does that make sense? I certainly hope it does. All right. So there it is for that particular position, and it comes in, and interestingly enough, this thing runs so hard that when you do get stopped out, which is here, and this happens because of the nickel trailing stop, all right? Two rules of thought here with the trailing stop, all right? The first one is, if the stock runs, I want to get as much as I possibly can with a very tight stop. Now, for those of us in the trading room with live trading and being able to stare things down, we don't have to do that. We can take part of our profits and we can watch the price action come into a space and watch the candlestick closes that tell us whether we can stay long or not. So in essence, we still get to stay long when the trade pops out. Doesn't really matter though, because soup to nuts, the trade, if you went in at the very top and you took the trailing stop in, you'd still be up 28% today. And it went in and out today. Johnson & Johnson also with a very tight trailing stop. I think this one could essentially have more room to run, as well as Walmart. Both of these guys got stopped out on the trailing stop. American Express got stopped out at the trailing stop yesterday. We've got 28.4, 34.2, and 55.5. Right? Now, what this does is recapture these events, the Johnson & Johnson and the Walmart. So here's the next question that comes to mind, people asking. What if I get stopped out of a trade? Can I go back? There's a very easy way to tell. All right? And I'm going to show you what the picture looks like if the answer is yes, and then I'm going to show you what the picture looks like if the answer is no. All right? Higher low re-entry event. Here it is. Johnson & Johnson. Prior day giving us higher low. All right? And then here's another higher low. So yesterday, the higher low popped us right back up over the pivot. We could get back in the trade because that was the area that we could enter. And still, If somebody wanted to be long, they still could be long because Johnson & Johnson's still going very nicely. Why are we not in the trade? The 5-cent trailing stop. You can, on your own accord, determine that that 5-cent trailing stop is too tight and you can expand it. That's good if the market continues to rally to the upside. But when the market starts flattening out and things accelerate into a region and then back off of it completely, you're going to have a little bit of trouble. Again, this is where the trailing stop initiated before this next big run. For us in the trading room, we can easily see that, watch the price action based on support, and then move back to the upside. So the chart for Walmart and for J&J look just like this. Look at the chart for Joy. This is a chart for Joy Global where we got stopped out of Joy Global. Take a look at this. It gapped down and then made a lower low. If it gaps down and then makes a lower low, that's a continuation formation. And if you look at your setups and you say, all right, I'm looking for, here's Joy, the breach of 64.21. If it comes into 64.21, you're going to have to be extremely cautious. I wouldn't take that trade because it's made a lower low. And I don't like to get in if something breaks a formation and I'm going in a specific direction. All right, so if it breaks a lower low, do not look at re-entering. But if it doesn't, if it blows you out because your stop is where it is and it comes in and holds the level and makes a higher low on the following day, as soon as it comes back into your trigger event, sometimes before, if you know exactly what you're looking for, you can get in again. And that's exactly what happened with J&J and Walmart. And as a matter of fact, you know, both of these things recovered quite a bit of their losses, right? So let's see, J&J 165. Okay, so that ended up to the plus. Walmart, that was the one that beat us with a stick because it gapped up and we took the trade at the open. Listen, that's probably not a good thing to do, okay? Just telling you, it's just not a good thing to do. That's negative 295. 192. So that one still left us red. Okay? Everything else today looks really, really good. Let me read down again what to do. Long calls. I am going to put short trade up here when it is a short trade, and I am going to put re-entry when it is a re-entry. So these guys are going to appear at the bottom here in the closed trade details event. All right, and we're going to just put them side by side and continue to run the profit loss events with them. The silver membership will only see a couple of these a week. The gold membership will see all of them. All right, so just so you know what's going on, Juniper actually doesn't look very good, but it still hasn't broken down. It's sort of languishing. That actually is going to be something that we're going to look at from a day trading perspective if it breaks out of that channel. Okay, so let me, I have one more question that someone asked me. I want to make sure that I answer it specifically. Someone said, how is the page format? Always new positions will be on the left-hand side. The older a position is, the further to the right it is, right? So the brand new ones are always going to be in the front. And the ones down here are always going to be the closed events. What else? Now, the next question someone asked is, why is it that you gave us the caveat not to enter if the gap is present? Now, I think that I absolutely answered that already. Yes, that I shouldn't have put limit there. It is market. Thank you there, John. John says on my little picture right here, this should actually say market and not limit, because it is market, right? It's not going to be a limit price because I have no idea what it's going to be. I don't know the price. That's going to say market. But your order time and everything else is going to stay the same. I'm going to try and put a little spreadsheet together, actually maybe a little PowerPoint together to show these pieces so that you can see them all. If you gap down and you have a short, the rule is exactly the same. The reason we don't take the trade at the open in the gap is because gaps have a tendency to fill at least 50%. And if they fill at least 50%, you're going to get the worst possible fill you could have in this trade. And you don't really want to do that. Okay? So all in all, we completely recovered off of the re-entry here. The last thing that I do want to say on this topic is there's good and bad about this trailing stop size. If you've just got a couple of options and you're not exposing yourself to a great deal of risk, then the very best thing to do would be when it gets to its target and the trailing stop comes in, only put the trailing stop on half and then leave the other half to come in and shake in or around support regions. Sometimes that's going to work for you, sometimes it's not. But think about how many trades we had in the room today where the breakout called the conditional order, we went in, it ran up, went where it was supposed to go, and then for part of these, they continued to rally to the upside or fail to the downside, and half the position was off, but a bounce came or a pullback came, and we were still able to stay in the trade because the stop wasn't wide enough. Because the stop was wide enough, all right? If you're day trading in the room, don't use this trailing stop size. It is just a recipe for frustration. This is good for the person who wants to get in, get out, is not managing the trade, does not know necessarily how to trade particularly well, right? This is just for folks that say you get in, you get out, you take your money, and that's all there is to it. All right, this is not a space for you to worry about mechanical pieces. So for that event, this trailing stop size is perfect because you're going to leave with profits 9 times out of 10. And incidentally, if we look at the Walmart as a loss because of the net loss on the gap down because it entered, that's the only space that we have a loss. We have gains here, we have gains here, we have gains here. All of them moving very, very nicely, and also think that's going to go really well, I think. But again, that's just using the trailing stop size. So that being said, that's all there is to that. Does anybody have any specific questions? Okay, one. Did you choose 5% as a standard trailing stop for any particular reason? Actually, yes, it was chosen for a very particular reason. And the particular reason is this. When a stock has a setup like these setups come, it's in a space where it's going to run. If it breaks, it's going to run. So we have no idea whether it's going to run and exhaust and collapse, or it's going to run, take a breath, and continue on. See, if it runs and takes a breath, we revisit it later, and then we put the trade back on because the formation is still holding. If, however, it's going to run and exhaust, that 5-cent trailing stop does a tremendous job at preserving profits. Now, if you've got something that's extremely high beta, A 5-cent trailing stop is going to be very, very tough. If you choose a 5-cent trailing stop working with a stock that does not have a tight bid-ask spread, you're going to get in trouble. There are very specific stocks that we use for this. They've all got a number of parameters associated with exactly why they're picked, and so the trailing stop size works for these guys by and large to get yourself profit. So the question is, the trailing stop is denominated in actual dollars. It's actually a $5 stop per option. Yes, $5 stop per option. So wait for the retracement to fill the gap and then enter. No, wait for the pullback into the breakout area that the system calls for and then re-enter. Or set the timer on it. Or if it comes in and it can't get back down to the 63.94 and continues up, you know that it's already in breakout and you can enter the trade. All right? But you don't want to make that decision, especially with Triple D. That thing is a widowmaker for pre-market action. All right? It fills its gaps so often, not even funny. Okay, and that's exactly what it did today. So not necessarily wait for the retracement, because it might not come. We definitely want to wait for the time, but what we want to do is come right back into the trigger point so we are starting off at the proper place. Is there a way to edit First Trigger's OCO? Yes, just go into the... Somebody says, is there a way to edit a First Trigger's OCO multi-part order in TOS? I've been canceling the whole order and recreating it. Each piece of your order has a little wheel on it, right? So this picture right here, oh no, it won't show it. The wheel that I'm talking about is that little green wheel in TOS. Each order, each element of that order has a wheel attached to it. If it doesn't and you're putting it in as a combo, just use the order type under advanced to be First Trigger's OCO, and then after you put in the first order, then go up to the option chain, click sell on the option that you are triggering to buy, and then that way it separates and you get a wheel for each one. All right? For me, that changes. I get that. I'm able to change those all the time. So it must be that I am putting them in a different space. So let's see. Hang on. Yeah, I don't put it in as a combination. If it goes First Trigger's OCO, then it will allow me to have its own particular adjustments as I need them. All right. Any other questions? Folks, this is a phenomenal trading system. It's phenomenal. All right? Certainly, you know me, I work really hard at getting the best that I can out there to you, and I believe this is it, or I would not have my name anywhere remotely near it. So it is going to be a very, very nice event for you. What you just have to get used to is the conditional event and watching and being careful about paying attention to gap action. All right? Gap action is very important. It is the one thing that caused the losses in Walmart. Had we had this additional rule, which I just added because of the Walmart event, had we had this rule in Walmart yesterday, we would have never entered there, and as a matter of fact, we would have gotten a great entry. I mean, a really, really, really great entry off the 50 simple moving average. You know, we'd have gotten in and made a ton of money. So we've got we've got things to look at now that will not let that happen. With the stop outs, oh yes, maybe you got here late. Somebody says with the stop outs on Joy, WMT, and J&J, is the system profitable for the week? Unequivocally, that would be yes. Let's take a look at it. All right. We've got We've got 158 here, 180 here, 192, 320. And again, the thing that really got us there, Walmart really was a doozy. So 320 plus 192 plus 180 plus 158. Just these advertised ones. And the answer would be yes. If we are looking at a $5,000 account, we're still up 2% for the week with all the losses, which is awesome, right? F triggered today. Could you talk about it, please? Well, I broke the rules a little bit with F because I can, because I sit here and I trade all day. So let's just peek at F. I entered F at the stop event around 1280 a couple of days ago when I saw it pulling back here. Now, it did trigger. My concern, and I do have a little bit of a concern here, is that what it's doing is triggering at resistance. So, in all likelihood, we're going to shift the stop up in F for tomorrow, simply because if it breaks this band, it's actually a failed attempt at the breakout, right? Because that's the breakout. And here's the secondary line of support. So if it loses 13, we're going to move that stop up for tomorrow. So it did come in right to the area. Here's the great thing though. Let's take a look at the formation. Why is it that I entered, why is it that I decided to enter F on the pullback here? Well, first of all, it was basing, and I did like how it looked. And I did see this area as relative support. See, when I trade and it's relative support, the second it drops below it, I'm out of the trade. Because I know it's broken support, I'm not expecting it to recapture support because that's an important support level right here. If it breaks down here, it means all the sellers overwhelmed the relative support, and so it's going to go into this level. 1280 was the stopping event, so that pulled in very, very nicely. I felt that it was a worthwhile trade there. It's come into this region twice. It came into this area yesterday, 1325. It pulled back into a higher low this morning, and then has popped up, and the high that it gave us here was 1327. So in essence, this thing is still grinding to the north. So it's going to be just fine. If it breaks out here, it's got this entire elevator shaft to retrace. All right, so it's got a lot of room. Are you concerned about too many people trying to execute at the same price? No, it's all at market. And we're not going to get the same price at market, right? We're going to get put in a queue in terms of who's fast. No. I don't have BRBK. It didn't trigger. BRBK has not triggered. Yeah. Yeah, if I said that, BRKB has not triggered. If I said that, I misspoke. I misspoke for sure. Okay, that's that. All right, so that's what you're looking at. Yes, it's pulled back a little bit, but the formation still giving us a healthy move, and we are going to shift that stop up because of the noise event here and the relative grinding here. It deserves to be moved up, so certainly that's what's going to happen. All right. Yes, I'm going to read that whole question and then make sure the answer is brought in. Are you concerned about too many people trying to execute at the same price? Might eventually cause liquidity problems with the option, or is that a bridge we'll cross? No, because we're all executing at market. We're going to be put in a queue, and whoever has the fastest system is going to get the cheapest fill. That's just the way it goes. All right. Is this system available to platinum subs as well? Well, here's the thing. The gold membership is created and designed on and worked on by a totally different group of folks. So it will be, of course, available, but there is going to be an additional cost. So it won't be much because you're a platinum member, but it certainly will be additional. Anything else? All right, I'm very pleased with how this is moving. I really, really am. I like the way everything is running. Please do not hesitate to email me with questions about the event. Certainly, if we're not even finished with the week, but if we made 2% each week, and we traded 48 weeks a year, even with the losses, looking at pretty nice returns. All right. So our goal is to leave these things as transparent as possible so you can see the trigger events, everything triggering at market, and it's just going to be good. All right. That's it for now, and I will give you more details on the membership as the month rolls on, but I thank you for coming, and hopefully this answers a lot of questions for you. If it doesn't, please, you can either use the comment box at YouTube where this is going to come up, or you can email me directly. All right? Take care, everyone.